Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
My top pick is Fastly. This is a really exciting company, and the stock has just launched, if you've been watching it all. It was up like 35% last week, and I have a little story about that. But let's just talk about what they do, first of all. They specialize in edge computing. What is edge computing? Well, from Wikipedia here, I mean, everybody knows what the cloud is. But when you say the edge, most investors don't know what that means. And it's about taking the computation of data closer to the location where you're doing it. So edge computing is a distributed computing paradigm that brings computation and data storage closer to the location where it is needed. All right. I recently learned more about this on a webinar with John Sculley, former CEO of Apple. He is an investor in a little company called Vicinity in the UK, a private company that does this too. And he basically says, we move the compute to the data. So able to do things without being always connected to the cloud or having to run the bandwidth back and forth to the cloud. You can do things at your location. So how is Fastly doing this? Well, here's Fastly's website. And they explain it as, deliver the best online experiences possible with our edge cloud platform. Move data and applications closer to your users. So again, this idea of going to where your end users are at the edge of the network. And this is where the idea of the edge comes from. So the edge is going to start to become as important as the cloud in the coming explosion with 5G and the Internet of Things. When 5G and the Internet of Things comes together, believe me, the edge is going to be as important as the cloud. So they're helping everything run faster, websites, apps, whatever. Okay, so let's talk about what happened with this stock and why. This was published, I wrote this on June 15th, the bull of the day. Fastly was a Zacks #1 rank. I did not know much about the company. I actually wrote it on Friday, June 12th, but then it was published early Monday morning, June 15th. At the time, it was a $4.5 billion provider of infrastructure software and services, cloud, security, the edge, all these applications. And they're classified as a content delivery network. So I'm calling them the little Akamai because they're serving a lot of video providers and for that streaming content. Well, guess what? What I found out is that they are TikTok as a customer, and TikTok, is just become all the rage. I did a little more research there, and I found this article on CNBC on May 27th that the owner of TikTok is a Chinese company called ByteDance. Maybe most people knew it was Chinese owned, but they reported a profit of $3 billion on $17 billion in revenue in 2019. So that was a 130% jump, and it's all about TikTok for ByteDance. All right, so this is in the stock. Fastly is trading at the mid 40s. It had already launched quite a bit. So let's just go to the chart and see what happened here. So here I published this article on Fastly last week on Monday. The stock closed out at 46, and it just took off. And even this morning here, we're up above 67 in new all-time highs. It was up 35% last week. Who knows what it's going to do this week? But investors, look at the volume just even on Friday when, last Friday when the stock barely did anything. So why are people piling in here? Well, there's another part to the story that I found out that I wrote in my Bull of the Day write-up. Here's me saying, last Monday I said, hey, if you get a chance to buy the stock near 40, do so. Well, we never got that chance. It went from 46 to 63 in 5 days. They did report a beat. That was exciting. They did report they raised guidance. They're not going to be profitable yet, but here was the raised guidance. And you can find this all on my Bull of the Day article. Just look up Fastly on Zacks.com. Here were the management comments. But here was the other comment that I think launched the stock from the Piper Sandler analyst, because on the call he said there was a mic drop, where Fastly management said they nailed down a large e-commerce vendor. And the analyst at Piper, James Fish, said he thinks it's Amazon. So whenever you lock in a new big customer, and it might be Amazon, I think that's what the street is paying attention to: the TikTok story and the Amazon story. And you saw some of the customers that Fastly already has: JetBlue, Twitter, Spotify, Airbnb, Kayak. So they've got a diverse base of customers who need computing at the edge. So price targets 2 weeks ago after their earnings were going up into the mid 30s. But I think somebody stepped up, D.A. Davidson stepped up and raised his price target on June 3rd to 55 from 33. And so that kind of got, more investors paying attention, and the stock has blown through that. Is it overvalued here? Probably. We should check the, I should check the sales estimates again. Yeah, so if we look at the projected sales estimates here, I mean, fantastic growth. If they're going to do 43% sales growth this year from 200 million to 286 million, that's what investors are going to pay for, and you would love to see 40% sales growth again next year. The estimates aren't there yet, but who knows? As analysts rework their model and look at the growth of TikTok and Amazon and everything else, every other company that wants to do stuff on the edge, you could be looking at another, 35, 40% sales growth next year. So, it's not cheap. You're trading over 15 times sales, but that's the market we're in, where investors will pay 15 to 20 times sales for these fast growers in new industries. So look to buy Fastly on the pullbacks. That's all I can say right now. All right, thanks for joining me.
So hi, I'm Daniel LeBeau. I want to be talking about LivePerson. It is the world's #1 AI-powered messaging application, and they are a leader in conversational commerce and customer service. So this pandemic has given them a strong tailwind, as many of these contact centers for businesses have only been able to be at 50% capacity. So they're relying on companies like LivePerson to communicate with their customers and seamlessly allow them to get to what they need. So you're probably wondering what conversational commerce is. It's a kind of a new platform for buying things online and through different applications. So the company utilizes things like WhatsApp, Facebook Messenger, text messaging, and even Amazon's Alexa. And it does it through AI, and you're allowed to either message or speak to Alexa, asking them, I need to book a flight, or I need a mortgage quote, or a plethora of other different requests. And this platform, LivePerson, is able to satisfy that need. So right now they have 18,000 customers, with some of the biggest being Home Depot, HSBC, and a number of other large Fortune 500 companies. So LivePerson is seeing healthy growth right now, and the ease and necessity of utilizing already heavily dependent communication channels like smartphone messaging and Alexa voice communication. The pandemic is only intensifying our reliance on these digital technologies, and LivePerson is well positioned to capitalize further on this expedited trend. So LivePerson is still unprofitable, and that's why we saw this massive drop off from the pandemic sell-off in late February to early March. Obviously, we've seen a little bit of a comeback in the stock, and its earnings on May 6th and early May really gave analysts a strong and positive feeling about the company. Management rose its EBITDA guidance for 2020 and kept its revenue and EPS guidance in line with what it was, which is unprecedented considering the economic situation we're seeing ourselves in. But there is a need for that type of technology, and investors are starting to see that. I think the company's still on the ground floor of its potential. I think we can see the stock rise substantially in the years to come as this COVID pandemic has given it a tailwind that I think will last for years to come. So analysts right now are giving it a price target between upper 30s to even the mid 50s. which is a sizable upside from what we're trading at today. And I think that right now is a great time to jump into this revolutionary fourth revolution driving company. So there is a sizable amount of risk still on the table for this company, considering its unprofitability, but it has close to $2 million in its balance sheet right now, and its market potential is massive, with its insight analytics and its go-to-market strategy having $60 billion worth of addressable market potential, which is enormous considering where it's at today. So I think right now is a great time to jump on this stock on the ground floor. So don't forget to like, subscribe, comment, and check out our latest promotion, which is a free book by our VP, Kevin Matras, and it's called Finding Number One Stock. So don't forget to check that out at zacks.com/promo.